We now take you live to listen to Finance Minister Arun Jaitley, who's addressing the press as of now. Let's listen in.
Significantly provide policy support to the real economy and help in the recovery process. We are looking forward now to the transmission of these cuts which will effectively help to boost confidence and investment. They will also help to realize the economy's medium-term potential growth rate. Indian corporates would also now be able to raise external commercial borrowings through rupee-denominated offshore bonds with no end-use restrictions. This would enable them to get additional source of resources. I think the Economic Affairs Secretary may want to add.
See, the rupee-denominated bonds, I'm just starting from where the Finance Minister left. The rupee-denominated bonds, since the entire bond would be raised in rupees and repayment also would be in rupees, there is inherent hedging because the exchange rate fluctuations, that risk doesn't exist. And there is an appetite for rupee-denominated bonds in the overseas markets. It's after extensive consultation that this has been announced by the Reserve Bank of India. The other thing which the Reserve Bank of India has done is with regard to the government securities. The limits for FPI investment have been increased to 5% of the outstanding stock by March 2018. The current limit, there is no formal limit, but the current operating limit is about 3.8% of the outstanding stock. It will go up to 5% of the outstanding stock by March 2018. So this, sorry, current is 3.8. It will go up to 5% by March 2018. This would mean about additional sum of about 1,20,000 crores, which in rupees, 1,20,000 crores of rupees, which will flow into the GSEC segment up to March 18. Now, of this, about 26,000 crores, the quarterly limits they have also announced, about 26,000 crores roughly would, approximately 26,000 crores would flow to the GSEC market in the current year, that is in 15-16. Second important aspect is that for the first time, the Reserve Bank has also allowed FPI investment in the state government securities, what they described as state development loans. This is also something which goes in the line of the principle of cooperative federalism, which the government has been emphasizing quite a lot. And the state governments also have been demanding for quite a long time about FPI participation in the state government bonds. So the state government bond, the limit that has been set is 2% of the outstanding stock by March 2018. This would mean roughly 50,000 crores, 50,000 crores would flow into the state government securities by March 2018. Of this 50,000, about approximately 7,000 crores or so will flow in the current year. These are the limits. And as and when the borrowings are done by the Government of India, the GSEC calendar we have announced for the second half of the current year yesterday. The state government, of course, the RBI issues notification from time to time. So we would expect that this would provide additional liquidity to the GSEC market, and this also should result in softening of the yields that are currently prevailing.
So, Chief Economic Advisor.
Yeah, just to add three things to what the FM and the Secretary said. The government is looking forward to the transmission of these cuts to the rest of the economy, and I think we will hopefully see some measures soon. But as the RBI also indicated, the government will work with all the concerned parties to facilitate this transmission, including by reviewing, as the Governor said, the framework of small savings. The second point, and it's related to what the Secretary just said, is that part of the transmission of monetary policy, part of it works through what the banks are going to do, but part of it also has to work through how market rates themselves come down, and that's why increasing the GSEC limits is part of bringing down market rates, help GSEC rates come down, and therefore this will also happen. The third point to note also is that I think the boost to the economy will obviously come from the confidence and investment that comes from the rate cut, but also the RBI has clearly signaled that it still continues to be in an accommodative policy stance. So that that should also reinforce confidence and hope that there can be more investment going forward.
Just one more point I wish to add. While we are talking of transmission of rates, the press brief, the written press brief, as stated by the Finance Minister, will be released immediately after this press conference. Now, the government also, it has also been decided that with regard to transmission of the rates, the government will undertake a review of the small saving rates also.
So what does that mean?
So how soon can we expect that, sir?
There's no time limit. You don't bind it in a time limit. We'll do it in due course.
Yeah.
And so are these the impediments that the governor has spoken about, that they're going to work with the government, they're going to look at these impediments for the monetary transmission? Is this one of the steps that you're currently discussing with RBI?
Yeah.
Now, small savings is a decision which government has taken in response to the policy, rate announced by the RBI. And of course, as the Governor RBI has said that the RBI is working closely with the Finance Ministry to see that the rates are transmitted by the banks and the financial institutions.
So just to add to this, will there be a complete review of the framework, the structure itself? Because there is already a set formula to decide the interest rates. So all that will also be looked into, the terms, conditions of various policies being offered.
Add to it, will it be ensure this annual reset? Will it be more frequent?
No, I think let's not prejudge the issue. The government will undertake a review. A review will imply a review of all aspects.
Thank you.
Another question.
Just one question, sir. This 50 basis point cut is more than what was expected. Is sudden change of heart because of the government pressure, or does it actually was required, or what? How is it?
You're free to speculate.
No.
On the growth front, sir, RBI has lowered the forecast for the current financial year, also for the next fiscal, I suppose. So how do you see things panning out? Because is this a 0.5% preemptive, seeing the situation ahead, or how do we look at it?
No, I think the way to look at it is very simple. I think the confidence that inflationary pressures have moderated significantly and prospectively as well, and the RBI is well within its comfort zone, it's going to meet its target. That creates a room to provide policy support to the economy.